Kamal, I just have one question, if I can ask at this point.
Sure.
It's about TQQ. As you mentioned last week in the group, saying that's a good time for entering TQQ with with a stop loss of 45.5, which seems to be actually working. Anyhow, it got reversed at some point, but it looked like the time that you mentioned, around 11 a.m. on a Wednesday, right? So it started getting reversed from that. So I still don't get it, like how you were able to know, from 11 a.m. there is a possibility where there will be a green candle, and it might reverse from that. It did reverse, but not completely. And then it's again started dropping because the entire market was down in last 2 days of the week. But I'm still surprised, like how you were able to know after 11 a.m. the green candle was forming.
Thanks,
Because I
Mr. For
tried finding out in a different graphs with a different time frame, but I'm still not able to get it.
Thanks for your question. So actually, it depends on how the market has closed on the previous session. So I would have mentioned either towards the close of the session or after the session, anticipating what to expect in the first 2 hours of the market next day. If the market gives a red closing, you could expect either a gap down opening and start forming green candle, or it opens higher and starts going down. So it varies.
Sorry, can you repeat that again? If you are having a red closing on the previous day, it might be starting with the green. You said?
If it has a red maru bazu or a black body, big black body, or a red body candle closing, then the next
Okay.
session it could give a gap down opening, or it
Okay.
could, if it doesn't give a gap down opening, it could open higher and then start going further down. So continuation
Okay.
of the bearish trend. If it gives a gap down opening, we could expect reversal and market could take it up.
Okay. All right. Makes sense.
Okay, and that becomes clearer after the first 1.5 to 2 hours of the trading in the next day.
No, because in this particular case, I think you mentioned this thing where the market was closed. Yeah, the message came during a night time. So I tried looking at our early chart as well as I tried looking at the 2 hours chart. But in both of them, there were no such signal where I was able to identify which says, okay, from this particular point, there is a possibility where it might get reversed. Because the indicators that I'm using are the Bollinger Bands, stochastic RSI, as Girish sir mentioned in our time, like that I prefer using that one because I'm more comfortable using it. Because it's a very clear indication of the blue and orange line. If the blue line is crossing orange line, there is a possibility where it will be a bullish trend, and or vice versa. So I try using that one, and I use EMA 20.
That's fine. That's fine. The stochastic RSI would be giving you reversal signal. So use of indicator, whichever indicator you are comfortable, that's totally fine. Now, the thing that becomes very important, specifically relating to your question, is the time interval.
Yes.
If you are watching on a 1 hour interval, then after post market closes, it may not give you the hint, because in pre-market, when it opens at 4 o'clock, from 4 to 9, there are 5 hours. So there would be 5 candles which would get formed. So what you can expect in the first hour will not be clear until you watch it in the pre-market. If you are watching
Okay.
on 4-hour candle, then yes,
Okay.
you could get a direction of what to expect, or you look on the daily chart.
Okay.
Okay.
Okay. Okay. Makes sense. Okay.
Okay. Great.
Okay.
Cool. So
Thank you, Kamal.
You're welcome. So let's start with the agenda of our session, wherein we go through the indexes analysis. We cover the TSX, NDX, QQQ, and also SPY. After the indexes, we go on to the stocks that are requested by our members, both in the premium group as well as our other WhatsApp groups, WhatsApp or Discord or Telegram. And we'll also be taking questions while we go along the session. And as part of this analysis, we also make sure that we cover crypto as well, as many of our members trade in crypto. Before I start with this session, I would just like to share with everyone that our trading course, which we are going to have our next batch, our current advanced course batch is going on. It started last week and it will be continuing up to 22nd of May. The next batch will be the trading course batch, which will be starting on 28th of May up to 19th of June. I have received request from one of our learners about one of his friends interested in the course. If we have more learners, we could prepone this batch as well. The class timing, we have kept it as 10 a.m. should be 10 a.m. to 1 p.m. Sorry for the typo here. And if this time is not suitable with the learners who have enrolled in the course, we can adjust the time as well. As of now, we have kept it as the last weekend of May, but that's tentative. For the advanced course, the current batch, we have covered the topics for advanced indicators. If anyone is still interested in joining that batch, the options topics are going to start from next Saturday. So still there is chance, if anyone is interested to join the current batch for learning the options topics, please feel free to reach out to me or any of the GMT instructors, and we would see how we can accommodate you in the current batch. So with that background, we'll start with the indexes analysis. And first we'll take TSX. As we had expected last week to expect stocks going down, and that is what has happened. If you look at the last two candles, big red candles, which has actually gone even further below lower Bollinger Band, and with the increasing volumes, it's almost certain that the next session it would drop down further. 200 EMA is at 2850. Currently it is at 21,186, which is almost about 300 points. So in the next session, expect further sell off of the stocks which are listed on TSX. If you look on the weekly chart, we had seen this candle last week, and the last week's candle, it has gone even further below the mid Bollinger Band, which was at 21,318. So a further downtrend, at least closer to 21K is definitely expected, since 21K was support previously. In this coming week, depending upon volume, we should be closely watching whether it takes that 2100 support or it goes further down. The lower Bollinger Band on weekly chart is even further below at 2475. So if it breaks the 21K support and goes down further, it shouldn't be a surprise. The indicators are downward, Williams R, CCI. Even on MACD, the red histogram has started forming. The volumes have increased. So all indicators, even the candlesticks pattern, are indicating further downtrend for TSX.
Is there any specific reason for this? Like why there is a lot of bearish trend nowadays? Because there are no such news which are popping into the market. But this is all of a sudden, I think.
So I would say based on indicators, it is clear. The news, as I say in most of our classes as well, that news follows what has happened. Once the stock drops or once the stock goes up, then there are news articles published that this stock or index has dropped by XYZ% or it has gone up. Whereas the indicators and technicals gives you heads up beforehand. If you watched last week's session, we had mentioned Vivek sir had given a advice as well towards the end to be nimble because we were expecting downtrend and that has happened. Vivek sir, would you like to add anything?
Yeah, Nitya, what happens is the technicals are anyway talking about being in an oversold position. Now, if you look at the last 5 candles, the 5th candle, yeah, the one, look at your RSI, look at your CCI, look at your MACD, look at the volume chart, look at the Bollinger Band position. They are all in an oversold position, overbought position. Now, around the last week, if you look, go back into history and check out, around Tuesday, you got a news and the world markets crashed. So in your case, it was Wednesday, Thursday. And the world market crashed because globally stock markets were in an overbought position. So they had to be sold off to let it crash. But technically you are there. There is exhaustion at the top end, and which is what we told you last week also, that we are expecting a market correction anyway. And of the 5 days, 3 red days have been seen. So what Kamal has said is very clear. I will endorse that also. The first target of 21,000 and next of 20,000 is on the cards. And this is a weekly chart. So it will definitely come down. You look at the super trends, it is already indicating down. So on the cards, you're below a lot of, you're already below 100 EMA. So your 50 EMA, 20 EMA, you're definitely much below it. And the price below 100 EMA is now hitting 200 EMA. So all this is leading to only one thought. A downward side movement is still around the corner. And if you look at the volume indicators, the volumes are increasing with a falling market. So people are getting out of their, liquidating their positions to bring in a steeper fall. So I would say be careful in your trades, be light, and expect a dip in the future. Yes, come on, back to you.
Thank you, sir.
Thank you.
Welcome. Very welcome.
Great. So let's continue with the analysis of NASDAQ, IXIC. If you look at the daily chart, 3 black crows, it is touching the lower Bollinger Band. The CCI is still downward. Histogram has increased. The volumes have been almost similar, but still it's a good red volume. Now, if I take this to a weekly chart, the lower Bollinger Band has turned downward. It has not yet touched the lower Bollinger Band. Indicators clearly Williams R and CCI are downward. It has touched the oversold region, but has not gone further from where it has usually reversed. So which means at least the start of session Monday, you can definitely expect it to drop further. And Tuesday or Wednesday, be closely watchful to see if it takes support around this level or if it continues further down. If you look on the daily chart, previously it had taken support close to 12,555. Currently it is at 12,800. So another 300 points drop. If it happens on Monday or by first half of Tuesday, that will be good. So watch closely if it reverses on Tuesday, either in the second half or on Wednesday morning. And why I'm mentioning this specifically, I'll come once we talk about the stocks which have earnings this week. But for now, at least Monday seems clear from the pattern that we are seeing here and the indicators that it is going to drop down further. This we are looking at IXIC, which has all the NASDAQ stocks. If you look at NASDAQ 100, a similar pattern on the daily chart. If you look on the weekly chart, the weekly candle closed at EMA 100, which is this light blue, where it had taken support previously. But because of this consecutive red candles, 3 black crows, expecting it to drop down further, since the lower Bollinger Band and also the mid Bollinger Band is downwards. If in case, like many times it happens on Monday, being Monday, many times market is bullish. So if it gives a green candle on Monday, you can still expect the market to bring it down on Tuesday or by Wednesday. Meaning it could be a bull trap on Monday if it doesn't drop on Monday. Vivek sir, would you like to add anything?
Just one more thing in this. You look at the last 3 volumes, they were higher than the average volumes, number one. Look at the MACD. The histograms had become smaller in height, but they were still negative, and now histograms have started increasing in height. Histogram is slanting downwards. Your CCI is slanting downwards. Williams R is slanting downwards. I don't see any hope of it bouncing back. I know it is sounding negative, sounding pessimistic, but you look at your Bollinger Bands. The mid Bollinger Band has curved down. The lower Bollinger Band has also curved down. And the upper Bollinger Band has happily curved up. That means he is expanding the balloon, expanding the Bollinger and allowing them to go further down. The tube is now expanding and allowing it to fall further. So at the current price of closure of 13,350, 13,000 is a strong support on multiple occasions. So 13,020 and 13,025 is a strong support on multiple occasions. That could be a bouncing point for you for the midweek to bounce it up and take it up. But if 13,000 crashes or is breached, your lower targets are immediately opening up. If you convert this to a weekly chart, you will realize that. And that is the reason why when you look at it's already at its 100-day moving average, the lower Bollinger Band is already at 1283, 12,800 or 12, yeah. And below that, your next support price, if you ask me, is be around 12,650. First support at 12,650, higher. Higher, come on, slightly high, that's it. 12,450 or 600. The support is at 12,600. If that breaks, if 13,000 breaks, next support at 12,600, failing which 11,300 is around the corner, which is also your 200-day moving average. And also a multiple support zone, 11,300.
It will be $2,000 drop.
If it breaks and breaches, because your 200-day moving average should be a very strong support to give you the breakup. So if 13,000 breaks 12,600, and if that also breaks 11,300 is round the corner.
Thank you, sir. And carrying forward the analysis from NDX to SPY, you'll notice similar trend. The weekly chart, 3 black crows, indicators are downward. The histogram on MACD has started increasing. Can also add volume here. The volume has increased. And this is on the weekly chart. If you look on daily chart, it has dropped below the lower Bollinger Band, and similar to what we saw on NDX, this support is closer to 414. But we need to be watchful to see if it reverses by mid of week, Tuesday second half or Wednesday. And analysis would remain the same if you look at Dow Jones. So overall, in summary, expect Monday to be bearish. Tuesday towards the close, if we see reversal, that would be great. Otherwise, watch closely on Wednesday for reversal. And this, now I would like to relate with the stocks that have earnings this week. This coming week, we have many stocks which have earnings. And to start with the earnings, the major tech stock, Google, it has earnings on 26. You can see here, E symbol is for earnings. These are the stocks that have earnings. For Google on 26, now just try to carry forward the analysis that we did on indexes on these stocks which are having earnings. So if you look at Google, again, Google is touching the lower Bollinger Band. The indicators are downward. The histogram has increased in size. If you look on the weekly chart, it has EMA 100 at 2300, close 2308. So which is another almost 80 points from where it is currently. So which means we can easily expect it to drop on Monday. On Tuesday, it could drop initially, and then because the earnings is in the aftermarket, there could be some buyers coming in as it would be in oversold region by then. So those who are interested in buying Google only for earnings, I would suggest to buy towards the close on Tuesday with a strong stop loss of 2290, and hold it only for 2 to 3 days just for the earnings play. It would be a risky play, but knowing that by Tuesday, if it follows the pattern that we have discussed, that Vivek sir mentioned during the indexes analysis as well, that if we see reversal either Tuesday towards the close or on Wednesday, because these would be in oversold, you could enter for taking the trade based on the knowledge that it is going to have earnings, which will be in aftermarket. Along with Google, on the same day, we have Microsoft earnings. And again, the pattern is similar. The last 3 candles are red. The indicators are downward. The lower Bollinger Band is at 268. Currently, it is at 274. So having similar expectation that further drop tomorrow, and good entry could be towards the end of market on Tuesday or on Wednesday. So if you look at these 2 major tech stocks, which are large cap stocks, these stocks trend would actually be impacting Nasdaq's index as well. And since we started our analysis from Nasdaq, the trend that we discussed there would be driven by these 2 major stocks, at least when we are talking about Tuesday and Wednesday's trend. Apart from these 2 major tech stocks, which are the large cap stocks, if we move further on the earnings, and that, let me show you from where I get that information. So these are the earnings on 26th. Now, if you go further, this is here. You go on calendar on 27th. We have Facebook earning, Ford, Qualcomm, PayPal. We'll come to Facebook as well. Now I'll take on 28th. 28th is Apple and Amazon. So these earnings, because these are large cap stocks, once their earning comes, you can expect, if the market continues on downtrend even till mid of Wednesday, either of these 2 earnings should help in a small reversal when Apple or Amazon earnings comes up. If we look at current trend of Apple, sell off in last session, the last 3 red candles, it has EMA 200, and this we are looking on the daily chart. EMA 200 is at 158, where it had taken almost 3 times support. So EMA 200 on daily chart could become a support. If we look further on the weekly chart, close to lower Bollinger Band is the EMA 50. So if it doesn't take support at 158, which is 200 EMA on daily chart, the next levels would be 157, which is the lower Bollinger Band on weekly chart, and then EMA 50, which is close to 154.5. So if you want to be conservative, you can watch how is the sell volume tomorrow, which I am expecting that it would drop. The indicators are downward. If the sell volume is higher, as we see on the last 3 sessions, and if it doesn't take support at 158, watch for 157 for reversal, or plan for entry at close to 154.5 or 155, only for the earnings play, knowing that on 28 it is going to have earnings. And usually with Apple, we have seen that upon earnings, the market has bullish sentiment for Apple. And Apple and Amazon both will have earnings on the same day. So I'll just quickly touch Amazon as well. Again, these three black crows on the daily chart, the increasing volume. And on weekly chart, it has lower Bollinger Band at 2756. Currently it is at 2887. So over $130, close to $130 further drop. And then it has EMA 200 at 2594, close to 2600. So depending upon how strong is the sell volume tomorrow and day after, you can watch closely for entry before earnings, entry looking at the current trend, and if it drops tomorrow and day after, could possibly be a good entry, as both Apple and Amazon and also Microsoft and Google are looking to be in oversold region. And this is based on indicators and earnings tied up together. Vivek sir, would you like to add anything based on your experience and any word of caution apart from what I have analyzed here?
Kamal, I think you have covered most of it very well. So nothing much to add. It's just that the word of caution is very, very important. And specifically when the MACD has now turned negative, it is all the more why, specifically for Amazon, things will tend to come down.
Yeah.
MACD histograms have turned negative. The lines are sloping down. Williams R, RSI, everything is in downward trend. So, no, I would rather be very careful with this. It is a trending down market. Sorry, guys.
There's a gap up here. And now I'm noticing on Amazon daily chart. So this gap was from 28 to low of 28,780. High here was 2,800. So this gap up, although it tried to close, but it had not closed completely. So this gap up could get filled. In this attempt, it had not completely filled this gap up.
That means that touch of 2800 is around the corner.
Yes.
If 2800 or 2775 is around the corner.
Right.
Bad.
That's why, at least at the start of this week, Monday looks to be bearish, not only just on the indexes, but specifically looking at the stocks which have earnings as well.
Very true.
So can we tell Amazon entry 2775?
Close to 2775, yes.
The lower Bollinger Band is 2756. And if you look at support here, yet close to 28 could be the first entry, 2800. But I would still say that depending upon how is the sell volume tomorrow. If it doesn't drop, then definitely that would be a bull trap. Okay. I see that in the request, Kamran has requested for Shop, Microsoft, and Meta, which is Facebook. So let's cover Facebook, which has earnings on 27. Last 3 sessions, the sell volume has been high. It has dropped below lower Bollinger Band. It is already in oversold region. If you look on the weekly chart, it's at the support. It has closed at the support. If it breaks, which most likely it looks it could break, because the Williams R and CCI, Williams R and RSI are still downward. Vivek sir, with this MACD converging, do you see some hope of reversing from here midway?
Well, Facebook already has taken a good beating, and with the well, you could look for a hope, but the overall market trend is negative. So I don't think Facebook will be the reason for the revival.
Yeah.
You look at Nasdaq and you look at the other exchange, the indices, they were negative,
Yeah.
and keeping that negative bias in view, Facebook, if you look at it, even on the MACD, has been very flattish. On the MACD has been flattish and very tubular form. Can you zoom out so that you can actually take a larger picture? That's it. That's it. That's it. Now you look at this. This is on a day chart. You
Yes,
are
sir.
ranging. You are ranging from 184 or 180 to 230. It's a $50 movement only. Am I right?
Yes.
Visually, 180, 185 to about not even to about 230 or 240. What is the high of the recent high? It's a very tubular form.
236.
230. So 230 and 180 is about $50 movement and a very tubular and narrow range being formed.
Yeah, and also just to add, we had seen this gap down here for Facebook.
Which is not yet been filled in.
Yeah, and last week Netflix had its earnings, which has suffered back-to-back gap downs. So last earnings, it had a huge gap down, and there was anticipation in the market that maybe this earnings would help to recover that, but rather instead of recovering, it has dropped further over 30%. So Facebook, hopefully it doesn't follow Netflix pattern, but yes, I just shared here so that that bias of being bearish could follow for Facebook. So looking at the weekly chart, it does give a risk that if it gaps down further, it could cover this gap which we are seeing on the, it could cover this lower Bollinger level which we are seeing on the weekly chart. Hopefully it doesn't, but based on what I noticed on Netflix, I'm trying to share here.
Very true.
But Kamal, like both Netflix and Facebook are two different entities, right? Like they totally, their business model is different. So, how do you see that?
Yeah, totally agree with that. These two are totally different entities. I was just sharing based on the market reaction upon earnings. The previous gap down was on earnings of Facebook. And similarly for Netflix, previous earnings was a gap down, and again it followed up in even in these earnings. So that instead of closing that gap down, it has actually continued further by another gap down.
Okay.
So this is what I was trying to share. In terms of business, yes, both are totally different. So let's see how it plays. But in terms of risk, I see taking Facebook is riskier compared to other techs which have earnings this week. It could, if it happens that it recovers, that's well and good. But knowing what has happened for Netflix, I am tending to be more defensive in going for Facebook.
Well, then we could get a put on Facebook, right?
No, Vivek, at this point of time, I would say avoid Facebook completely. Can you go back to the chart, please,
Sure.
of Facebook? I'll tell you why. It's a negative bias all going down, right? You look at 200 on top, below that is 100. Bollinger Band expanding, 3 black crows, EMA 20 sloping down. But Facebook at this point of time is at its very strong support levels. Just draw out and check your support levels on a weekly chart or even on a daily chart. If you can convert this to a weekly chart, you will see it immediately. Right? See that? 3 week or 3 week support at 180.
But you have a 3 black crows, so it should.
Yeah, I agree. You have 3 black crows, but you are on a 3 weekly support. You are currently at a support level.
Mhm.
It has to be carefully watched now whether it breaks the support and goes down or not. If it does not break the support and go down, it could rally up immediately. Now,
Okay.
what is actually asking me to be wary is MACD. Look at the way histograms are moved. They were red, reducing in size, suddenly turned positive, and look at the MACD line and signal line, crossover, almost mixing it up. Now, even if the Facebook rallies and goes up, don't expect a very strong rally because the MACD is the crossovers are pretty far from zero number, from the zero line. So even if the strength comes in slightly, it will be a bull trap.
Yeah.
It will be a bull trap because it will go up. It will tempt all the traders because Facebook being Facebook, wow, it's reversing. Let's enter. You will enter, and that is the end of your trap. So at this point of time, I would say Facebook, wait and watch till you get a very clean reversal.
Sir, how about put, sir?
You can buy a put, but will it fall? Are you sure? Let's say Monday morning I buy a put, and this, because of the crossover in the MACD, gives it a push up by about 200 points. Currently at 180, it goes to about, let's say, 300. Not even 200 points. Let's say 150 points or 120 points. At 300, you will get a lot of people wanting to buy it. So your puts will become zero value.
Yeah.
Which is the reason why I'm not doing it. Because my MACD is killing me. The histogram is almost turned flat. The signal line and the MACD line is intertwining in between each other. So it could give you a small bump up. It could give you a small bump up to trap the bulls. Currently at 184. I will not be surprised if it touches 240 or 220. At 220, a lot of people will jump into Facebook, and by the weekend, it will come back to 180. So all within the next 5 days. Currently 184, it could touch 220 by Wednesday. And then Thursday, Friday, it will say, thank you very much. I'm taking a dip, going back down. Look, Facebook revenues have been impacted. Your technicals are not in your favor. Look at the RSI sloping down. Look at the Williams are sloping down. Look at the volumes are down to the last how many weeks? Weekly chart. It is below the weekly average. So which is why, yes, puts is highly favorable, but then you will not be able to take put because it's already at its 3-week support level. At so 184, a put at this point, no. But if you are a very strong trader, at 184, I would buy a call. I would buy a 200 or 210 call. For about, give me about 2-week expiry for about 210 call. But I'll have to be quick. I have to be very quick. This is a counter trade I'm taking. Only based on one signal, which is MACD and nothing else. Only MACD at this point of time is telling me I might give you a slight bump up. Nothing else. All other indicators are down. Your EMAs are down, RSI down, Williams are down, volume down.
Yes.
Clear,
Thank you, Vivek, sir.
Yeah. All
Yes.
right.
Go ahead, sir.
Welcome.
Yeah. Vivek, do you have any more question for Vivek, sir?
No, man.
Okay, great. So I was going to switch to Shopify, which is also in Kamran's request, and also because of Shopify's trend. Shopify again on weekly chart, 3 black crows. The volumes have been increasing. Williams RCCI downward. Histogram had reduced and then now started increasing in size. Again, similar to Facebook, if you look on the weekly chart. In fact, for Shopify, it has gone ahead of the support on weekly chart. It has broken the support and has dropped further. Lower Bollinger Band is much lower at 243. Hopefully it doesn't drop that far. On daily chart, it has almost touched the lower Bollinger Band. It has gone below its previous support. It's in oversold region, but because of bearish sentiment in the market and shop is traded on NYSE and also on TSX, where we are expecting further downtrend. At this point, it would be watch how Shopify, how much it drops and reverses, because it has broken previous support. The next Bollinger Band level is much further down. So we'll have to see way back in 2020 at the levels when it was trading around these levels. So 448, which is 450, which is just about $10. And the next support would be 335, which is about 100 over $120. 450, 445, hopefully it takes support. Since it has dropped below the 200 EMA on weekly chart, expecting reversal soon is, at least indicators are not showing in terms of EMAs, the Williams R CCI is showing it is in oversold, but with market sentiment expecting reversal immediately would be little unfair to say, at least from the indicators point of view.
Kamal, is it also going down due to this shop split announcement in June?
Ideally, split announcement makes it to go further up, but with the market sentiment itself, it has been going further down based on the market trend, overall market trend. Overall market trend has impacted more than its companies, more than the split news which has come from the company. We could have expected that when the split news came, it would reverse, but the market trend has impacted more than that company's news. So at this point, holding it until the split happens or closer to the split date, which is end of June. And if it reverses mid of week along with other major stocks earnings, that could be time to average down if you are holding. I am holding, so I will be watching to average down and hopefully get a chance to close around the first target would then be the mid Bollinger Band on daily chart, which is 628. If it drops further down, then this could come down, easily come down to close to 600, which looks to be a resistance here. If I expand, yeah, so 600 would be the first resistance. And on weekly chart, EMA 200 is at 800. That would be the next target. After it reverses. This I'm looking on 4-hour chart, but let me come back to 1-day chart. Vivek sir, do you have any different opinion?
No, Kamal, I think you already covered it.
Yes, the way it has dropped this year, it was not expected. It has dropped over 70%. If I just take it on weekly chart, from a high close to 1760, it is now at 460. So over $1,300 it has dropped. So this steep drop has continued further, and even this current week we are seeing it's further on downtrend. Okay, so we are close to 2. Let me just quickly cover Tesla, since Vivek had asked for Tesla or shop we have covered. Let's quickly cover Tesla and FedEx. Tesla, as we had discussed last week, it almost followed the similar pattern that we had expected it to go further up to mid Bollinger Band and then drop. After its earnings, instead of dropping, it had given a gap up opening, but because of the market trend, it faced resistance at the super trend level and has dropped down following the market.
Thank you,
So at
Kamal.
this, yeah, you're welcome. So at this point, because it is a red doji, in next session, looking at the market, we can expect it to drop down further and since it had not touched the lower Bollinger Band, in this coming week, we can expect it to drop down and reach near the lower Bollinger Band level of 940 or 950. If the sell volume is higher, it could drop down closer to EMA 200 as well, 895 or 894.
Kamal, I would really like to take this opportunity to thank you for Tesla put that I bought a couple of weeks back, and also to Vivek sir. So to other members, like I had requested, and they both helped me in buying put. I bought actually two, out of which I sold one at 90% profit, and another thing, one I'm just holding. I still have May expiry, so thank you so much, Kamal, for that. I hope I will reach some more profit and then sell it.
Awesome, Vivek. We are very happy for you, and also thank you to Vivek sir for his analysis as well last week and his suggestion. With this trade that you took, you were able to make more than 90% profit, which is very satisfying for us to know, and really glad that you were able to book that profit.
Thank
Thanks,
you,
Kamal.
Vivek. Thank you,
Thank you,
Vivek,
sir. Thank
for
you,
your
sir.
words of encouragement. Is all I can say. I'll be happy for you. Have some more trades, get more confident, and generate the trade yourself. That will be a better way to say thank you to all of us.
Sure, sir.
And whenever you take a new trade or you're planning to take a new trade, do bounce out the idea. Possibly we can also capitalize on the same idea.
Definitely, sir. Definitely.
I
For
think
options,
if I'm not mistaken, it was you who identified that the trend might change, and we only added to your analysis. So the credit should go to you back.
thank you, sir. Definitely, sir. I am for options. I'm just taking my time to play. I'm not rushing at all.
Don't worry.
So definitely, all my whatever I think of that goes through Kamal or yourself for sure.
No worry. The idea is that we have already discussed with you earlier, where we told you how you should use your skills, which you have already developed in identifying a trend, to then take trades in your options, which you're doing a good job anyway. So congratulations to you also for that.
Thank you, sir. Thank you, Kamal.
Most welcome.
Welcome, Vivek. We are happy for you. So although we are at 2, I'll take the last request from Vivek, which is FedEx, before we can call off the session.
And Mirza has requested for Microsoft.
Yes. So we did discuss Microsoft.
We did do Microsoft once, but then just first take FedEx and then see if we have time left.
Sure. I'll complete FedEx, and again, before closing, I'll touch Microsoft. Okay. So for FedEx, the last candle is a gravestone doji. The market trend is bearish. MACD, the histogram were reducing and then started increasing again. Although the last histogram is smaller than the previous one, but volume is red. Williams is in oversold region, but still for FedEx as well, I would say, looking at the weekly chart, it's better to wait. On daily chart, it took resistance at the super trend, which was very much close to the mid Bollinger Band and has curved downward. The next support would be again close to 200. It is currently at 204. The last candle is a gravestone doji almost. So yes, looking at the market trend, I would still say to wait and see once it reverses. If it again takes support close to 200, then you could enter. with a stop at 189 or 188. But at this point, it's better to wait for FedEx before taking call or put. And especially since you will be trading in options, it's better to wait and avoid rather than entering early.
Okay, come on.
Yeah.
I mean, there is a
Vivek,
lot of
Vivek,
gossip about FedEx. I never watched FedEx, but like,
Vivek, if you remember the super trend session we just did, look at the red super trend line. Is it becoming flat? Right? This line is becoming flat super trend line, which is acting like a resistance for this price to go up. You remember
okay,
that?
sir.
You
Yes,
remember
sir.
that? So if
Yes,
this
sir. Yes, sir.
resistance line gets broken, this super trend will suddenly turn green.
Okay, sir.
If this gets broken upwards, if there's a breakout upwards, the super trend also will suddenly turn green.
Okay, sir.
Right? So that is one. That is the importance of the super trend. I mean, I just saw it. I thought I would let you know.
Thank you, sir.
Done.
Okay, so just to close off, we'll
Kamal, like, have this in your watch list. There are some news coming out on FedEx.
sure. I'll keep this in my watch list. I'll
Yeah, we
add it
never
to my
watched this, but like this one was coming out this week, so I thought I should pass it on.
Thank you. Thanks,
Yeah.
Vivek, for bringing to our attention. I'll keep in my watch list. Now, just quickly to wrap up for Microsoft, Kamran, as we were discussing about the indexes analysis, the last three candles, three black crows, it's downward. It's in, although Williams R is in oversold region, but if you look at MACD, the histogram size has increased. The sell volume is increased in last three, if you look at especially at the last two sessions. And on the weekly chart, it has a EMA 100 at 260, which is another about $13 if we look at the after market close price. It has its earnings on 26th. So what I had suggested is that wait for the further drop in the next session, which is Monday. On Tuesday towards the close, see whether it has touched the 100 EMA and is it taking support. Then you can enter towards the close of Tuesday or on Wednesday first half. Because the earnings will be released in the aftermarket, if you can manage to buy before close of Tuesday, knowing that upon earnings Microsoft and Apple, they usually go up, you can take a chance, but please enter with a stop loss, because upon earnings, although the indicators are currently, because they are downward, and by Tuesday on the daily chart, hopefully they will be in oversold. So being in oversold, most likely it could go up, but still it would be better to enter with a stop loss. If you are trading only stock, you can actually wait to buy in the aftermarket itself. For those who are trading option, I was suggesting to buy towards the close of market. If you are trading stock, you can wait for the earnings to come out. You will lose some profit if it goes up. But buying towards the close of market on Tuesday or upon confirmation on Wednesday about reversal, then you can enter for Microsoft.
One very important fact is Microsoft on the daily chart has given you three black crows, closed at the low point of the day, of the week. And if you convert this to a weekly chart, it is even more scary. Again, three black crows, but the last candle, it's a inverted hammer on the downtrend. So immediately opens up your Pandora box for coming down. If I was to trade this, I would trade this as a buy at around 260 or 265. If I was to buy it, I would buy it at 260 or 265 only, not before that. If I've been told to buy and the gun put to my head, otherwise I would like to stay out. Wait for a proper reversal signal before you think about it, because the weekly support is at 270. So I would buy it at 265 because I did see 265 somewhere earlier also.
Yeah, it's lower Bollinger Band is at 266.
Yeah, so I would have looked at 265 to buy it first.
Yeah,
Not before that.
Right.
Because on a weekly candle is giving me an inverted hammer, I'm expecting it on a weekly candle to go below.
Right.
And your MACD is clearly signals are going down and expanding. The signal line and the MACD line is expanding downward. So it will go further down.
Yes. Okay.
Yeah, thank you, Kamal and Vivek, sir.
Welcome, Kamran.
Welcome. So with that,
Kamran, is your name Mirza or is your surname or is your name Kamran?
Kamran, Mirza is surname, so
Mirza is surname. All right. Then I'm glad I'm calling you Kamran then.
thank you. But yeah, it follows an unconventional, Mirza be right first. It's
All right. Then actually, I understand. No, that's not an issue. So I will call you Kamran only.
Yeah.
yes, sir, Kamal and Kamran.
Yeah.
Yes, sir. So with that, I would say that we are at the end of our analysis session. Based on whatever we discussed, to summarize, expect a bearish trend at the start of the week. Watch for reversal midway through the week. If there is reversal, you could enter, but for a short-term trade. As over the long term, because on weekly chart we are still seeing further downtrend, further drop is possible. So short-term trades sometime during the mid of the week, if there is reversal, is what we would suggest as per our today's analysis on, and especially for the stocks which are having earnings, you can have a close watch and see what is the trend before the earnings release and then decide to take your trades. We accept just last piece of advice before we close.
All I can say is geopolitical news is not very helpful. So please stay light in your trades. Don't take unnecessary exposures. Try and keep booking your profits the minute you get them. Try and secure your profits the first chance you get. Is all I can request all of you with folded hands. So good luck to all of you. Trade. Keep your biases in mind, expectations from the market in mind, and just trade safely. Thank you very much.
Thank you, sir. And thank you everyone for joining. Hope you all have a profitable week and a good week ahead, considering the summer has started here in Canada. So hope you all have a nice week as well, and see you all in the next session on next Sunday.
Thank you.